So, Krispy Kreme stock absolutely exploded on Tuesday, and yeah, let's be honest, it was a tasty rally. The stock surged over 26% during regular market hours, and then, just when you thought it might cool off, it rocketed another 34% in after-hours trading. That's not just a sugar high. That's a double-stacked dessert tray of gains in a single day. Now let's talk about what actually triggered this move, because on the surface, it might seem kind of silly. Krispy Kreme is celebrating its 88th birthday, and to mark the occasion, they launched a special promotion, a dozen donuts for just 88 cents. Sounds like your average feel-good PR stunt, right? But the reaction was anything but average. Social media lit up, customers lined up, and retail investors took notice. This kind of deal might not change a company's earnings overnight, but it does stir up brand sentiment, and in today's market, that can matter just as much, especially for a brand like Krispy Kreme that already has a nostalgic fan base. People aren't just buying donuts, they're buying the vibe. And that matters more than ever in an era when consumer perception can shift stock prices almost as fast as earnings reports. But the donut deal wasn't the only thing rising. Interest from retail traders jumped massively. DNUT has become one of the most talked about stocks on platforms like Reddit and StockTwits, with posts pushing the idea that this could be the next short squeeze. And that idea isn't coming from nowhere. Around 26% of DNUT's float is currently sold short. That's a big number. And for traders hunting for the next GameStop-style move, that kind of short interest is like dangling a jelly-filled treat in front of a pack of hungry bulls. On top of that, Bank of America recently weighed in. They did slightly lower their price target, from $7 to $6, but they kept a buy rating, and they're still projecting a near 100% upside from where the stock was before this latest run. In a market that's been leaning cautious lately, a bullish stance from a major analyst, even a tempered one, adds fuel to the fire. And let's not ignore the context here. DNUT has been trading relatively low for some time. It's been under pressure, and it's not the kind of name that typically gets much attention, until now. So the fact that it's suddenly running like this, gaining momentum and media attention, shows just how quickly sentiment can shift, especially when the stock price is still perceived as cheap in meme stock terms. Now, the big question, can this rally actually continue? The honest answer is maybe. We've seen meme stocks like this before, massive surges out of nowhere, driven by a mix of short covering, retail enthusiasm, and social media buzz. But DNUT has a few things going for it that might separate it from the pack. For one, the after-hours move wasn't just a blip, it was 34% on top of an already strong day. That suggests buyers didn't just jump in and run, they stuck around, and new ones joined after the close. That's often a signal that there's still demand in the tank. Also, we're heading into the kind of season where feel-good consumer brands can perform well. If Krispy Kreme can turn this promo into a sales bump, or if they issue an upbeat earnings preview in the next few weeks that could give the move a second wind, or at least prevent it from totally deflating. But let's not sugarcoat it. Pun intended. This is a speculative play. There's no massive change to the company's fundamentals. There's no earnings surprise, no new partnership announcement, no strategic acquisition. This rally is being driven by hype, sentiment, and short squeeze dynamics. And while that can create opportunity, it also comes with a ton of volatility. So if you're thinking about jumping in, be clear about your goals. This isn't a long-term dividend play. It's a high-risk, high-reward trade that could either catch fire again, or burn out just as fast. But for now, Krispy Kreme has found its way back into the spotlight, and retail investors are licking their fingers. If nothing else, it's a reminder that in this market, a few donuts and a meme-worthy ticker can be just the recipe to whip up a frenzy. DNUT might not be changing the world, but for the moment, it's changing portfolios. Whether that ends with a sweet profit or a sticky mess, well, that's what we're about to find out.